2026 just delivered one of the most brutal wake-up calls to over-leveraged traders, and at the same time, opened the door to a new wave of earn-while-you-sleep crypto models and high-risk, high-reward plays. In the last 24 hours, more than 182,000 traders were completely wiped out, with total liquidation smashing through $1.08 billion. Almost all of that came from one side of the trade: longs, traders who were convinced the market would keep going up. Bitcoin long positions alone saw over $427 million liquidated, while Ethereum longs lost around $374 million. Derivatives platforms like Hyperliquid, Bybit, Binance, and BitGet all reported heavy flows, with a single BTC position worth $13.5 million getting nuked on BitGet in one shot. While this cascade was unfolding, Bitcoin slipped into the high 89K range, and Ethereum dropped below 3K, dragging altcoins into a deeper red, with many now showing daily RSI readings under 50, a classic sign of persistent selling pressure. This is textbook deleveraging. Forced selling triggers more forced selling until the weakest hands are flushed out. Events like this highlight a brutal truth. Most retail traders are not losing because they picked the wrong coin, but because they used too much leverage in a market that can move 10% in hours.
That is why a different narrative is gaining traction in 2026. Low-touch, cloud-based earning models that promise daily returns without charts, liquidation risk, or expensive mining rigs. Two names stand out in this new wave: Loyal Miner and Investor Hash, both pitching a participate, don't overtrade model for people who want exposure to crypto without living inside trading terminals. Loyal Miner is built around what it calls a cloud-based earnings model, where all the complex technical work runs in the background while users simply register, choose a plan, and receive daily distributions. There is no need for mining hardware, no complicated setup, and no constant monitoring of price action. The platform leans on three key promises: simplicity, transparency, and stability, positioning itself for beginners, long-term investors, and those who are tired of the emotional roller coaster of high-frequency trading. New users can even start with a free trial, registering an account, claiming benefits, and letting the system credit earnings automatically each day. This model targets people who want light participation, sustainable earnings, turning crypto from an always-on job into more of a background yield stream. Investor Hash, AI-powered cloud mining. Investor Hash takes a similar no-hardware daily income idea, but applies it directly to Bitcoin and Dogecoin cloud mining. Instead of trading price swings, users buy hash power contracts that are designed to deliver predictable returns over fixed periods. The platform advertises AI-driven contract management, high-performance GPU infrastructure, and more than 76 data centers across Europe, North America, and Asia to support uptime and efficiency. Users can fund contracts in major assets like BTC, ETH, USDT, USDC, SOL, Doge, and more, then monitor performance in real time via a mobile app. Example contracts include a $100 starter trial for 2 days returning $106, a $1,000 12-day plan returning $1,156, and higher tier options like $12,000 over 35 days, paying out $19,140, with returns settled every 24 hours. The pitch is clear: no hidden fees, principal returned at the end of the term, and a focus on steady income instead of leveraged speculation. But while some investors are pivoting to stability, others are still hunting the next 100x. That is where Patos, a new meme coin presale, is trying to position itself against giants like Dogecoin, Shiba Inu, Pepe, and Bonk. The article calls this the meme-coin paradox. The bigger and safer a meme coin becomes, the less likely it is to deliver life-changing returns. With multi-billion-dollar market caps,
legacy meme giants now behave more like stablecoins with dog faces, where a simple 2x move requires billions of fresh capital. Patos, by contrast, is launching as a microcap and had already raised around $97,000 at the time of the report, framing even a move to a $10 million market cap as huge upside for early presale buyers. The project emphasizes presale bonuses, allowing early investors to get in at fixed discounted rates before the token hits exchanges. One of its biggest selling points is that it already has confirmed listings on exchanges like Asbit, BitStorage, DexTrade, BitsPay, and Trapix, with a goal of reaching 11 listings by the end of January. These confirmations act as a trust signal, suggesting third-party due diligence and improving liquidity prospects once trading goes live. Beyond listings, Patos leans heavily on narrative and tokenomics, cross-chain ambitions across Solana and Ethereum, aggressive marketing, and an emphasis on organic community growth on X, Telegram, and Facebook. The team highlights that it is taking under 2% of the total token supply, vested over 365 days, to avoid the kind of founder-heavy allocations seen in some older projects. The article frames Doge and SHIB now as wealth preservation plays, and argues that in 2026, asymmetric bets like Patos are where a $2,500 ticket might, in a best-case scenario, grow into six figures, though with far higher risk. The pre-sale had already crossed the $100,000 mark and targeted 6+ centralized exchange listings, with the warning that once the project approaches a $1 million raise, the early-stage ROI window starts to shrink. So, after a $1 billion liquidation day, the market is clearly splitting into three camps. There are traders still trying to time every move with leverage. There are investors migrating to automated cloud-based earning platforms like Loyal Miner and InvestorHash. And there are speculators embracing high-risk pre-sales like Patos in search of outsized returns. Whichever path viewers choose, the key lesson from this week is simple. Understand the game you are playing, the risk profile you are accepting, and whether your strategy can survive the next 24-hour liquidation cascade.